You know what it is. That's right. It's time to talk money with your money nerd and financial coach. Now, tighten those purse strings and open those ears. It's the Money Talk with Tiff podcast.
Hey everyone, I am so excited because I have Janna Scott on the line, and Janna's here to talk to us about something we've never talked about on the podcast before. I know you're like, Tiffany, is that even possible? Yes, it is. Today, we are talking about crypto taxes. So we've talked about crypto before a few times. We've talked about taxes before a few times, but we've never talked about crypto taxes. So hey, Janna, how are you?
I'm good. How are you?
I'm doing pretty good. I'm excited about this conversation because I know a few people in the audience probably have questions about, they're getting into crypto and trading, and they're like, okay, what does this mean for my taxes? So let's hop right in. First and foremost, what would cause something to be taxable when it comes to crypto? Because I know everybody's on the little platforms and stuff like Coinbase and so on and so forth, and they're just having fun buying and selling and doing all types of stuff. But what causes it to be taxable?
So crypto is taxable in various different income categories. There is capital gains, short-term and long-term, and then there is income. So those are the three main categories of crypto taxation. Now, crypto taxation, capital gains, short-term and long-term fall into different categories. So short-term is anything you held under a year, which honestly, most of the time, that's the case for crypto because people buy and sell consistently with crypto being so volatile. But there's some people who've held crypto. They bought it back in 2014 and they're still holding it. So that would be a long-term, everything over a year and a day. Now, the tax brackets for long-term is 20%. So you make 100,000. You have long-term. You have $20,000 taxable event, right? You have to pay taxes on $20,000 in tax. Now, short-term is a little bit different. Short-term ranges from 28 to 37%. So if you have 100,000, you can pay between 28,000 to 37,000 in taxes, and that percentage depends on someone's overall income tax bracket. So high income earners will be on the higher end. Low income earners will be on the shorter end. Now the income, and I'll go into which transaction types are what in a minute. Income is, well, what it says, it's income. Income is simply whatever you make, whether it is, well, we'll go into the details right now, whether it is you're receiving crypto from someone else, whether it is you are mining. If you're mining, that's considered income, or you get paid for something such as, a lot of influencers, they get paid with crypto. That is ordinary income. It goes into your ordinary income tax bracket. The more you make, the higher your tax rate. We all know this. Then we have the capital gains events. And so for capital gains, the main transaction types are obviously sell. You sell, you have a capital gains event. Let's say you buy something for $2,000, it grows to $5,000, you sell it, you have $3,000 of capital gain. Again, long-term or short-term, depends on how long you've held it. Trades are capital gains events, long-term or short-term, when you take your Bitcoin and you trade it for Ethereum. Bridging is also a capital gains event. If you have minted an NFT and you send it to somebody else, or you sell it, that's also a capital gains event, long-term, short-term.
Gotcha. So let's back up a little bit because you were throwing out a lot of crypto terms, which I'm familiar with, but the audience may not be familiar with. One thing that you threw out there was mining. Somebody might be like, well, how do I know if I'm mining? What is that?
Well, mining is I have a 15-year-old who loves to play Minecraft. And so I tried to explain mining to him. It's like in Minecraft, right? You're digging up blocks, and some of the blocks have diamonds in it. Some of the blocks have, gold in it. And so basically you're mining blocks on the blockchain, and you will receive crypto in exchange. And so It's really what it is. You're putting in work to earn something, and that is always income. Okay. Now, you don't put in work when you actually buy crypto and you just let it sit there. That's called passive income because you're not actually working for it. But in mining, you're physically mining blocks on the blockchain, and you get reimbursed for this. And so that is income.
Gotcha. Thank you for that explanation. I know that probably helped a few people out. All right, so let's get back into the tax part though. So I know, for instance, I have quite a few friends where they're just like, oh, I just want to get into crypto. I just want to buy some Bitcoin, whatever, and not really thinking about the tax implications. And so what if there's somebody listening and they're like, okay, well, I know I bought and sold last year, but I didn't keep track of anything, like as far as how long I held it or any of that information. What do they need to do now?
So, and that's the main reason why I created DeFi Tax. There's products on the market. Obviously, everybody knows it. They're endorsed by multiple of the exchanges. The exchanges themselves at this point are offering reports that show a capital gain and loss event. So I've been in accounting for years. I worked for the government. I left the government. I opened up my firm. And about 3 years ago, I've had clients call me and say, hey, I have crypto. How do I report it? And I've had crypto myself since 17. And I said, oh, I don't know. So what I did is I went down the rabbit hole, and I had this little wallet that had maybe 300 transactions on it over a couple year period. That was just kind of my playing around, testing here, testing there. And I connected it to all the products on the market. There's a total of 14, and I didn't discriminate just for the US. I used products from all over the world because, somebody might have gotten it right. So I connected it, and I expected the outcome, on 300 transactions in the crypto world, that's really nothing. I expected the outcome to be about the same, right? Maybe some variances, maybe a little bit of difference in the capital gain, short-term, long-term, and income report for the year that I selected. And it wasn't. It was everywhere. It was all over the place. It wasn't that 7 of the products matched and the other 7 didn't. It wasn't that even 2 of the products matched. No, everyone was all over the place with variances between 10 to 35%. And that is concerning, especially on a 300 transaction wallet. So I said, well, this is odd. And I went in and I pulled the raw data from all the products, the crypto tax products on the market. I pulled the raw data, and then I pulled the raw data directly from the blockchain in order to compare and see what the issues were, why they're doing it wrong. I researched with the IRS. I contacted the IRS regarding certain regulations. I talked to professionals from universities, PhDs, et cetera, that work with the IRS. And I validated what I found and what the issues were. So now this is the problem. You can go to one of the products and they will tell you, and this is not over exaggerating, one will tell you have a gain of $25,000 for 1 year. And another product for the same exact year, the same set of data will tell you have a loss of $351. That is a huge difference, right? But now the other problem is you go to one of the exchanges, and on the same set of data, that because it's from their exchange, they will tell you have a gain of $99. There is a variance. It's a huge variance, and there really isn't a good way right now to do this right. Because manually doing it, trust me, it took me a year to figure out how to manually get it right and what the issues are. So initially, once I had my findings, I went and I spoke. I contacted all the products, and I said, and I even contacted some exchanges, and I said, hey, I don't want any money. I found issues that are detrimental to your users and taxpayers. I want to give it to you so you can fix it. 90% of them said, we don't care. Block me. Yeah. Then the 10% that I spoke to the CEOs and their tax attorneys. They couldn't answer the simple questions as to why are you pulling this data? Where's this number coming from? And then they turned around and tried to sell me their product. And I said, well, no thanks. I'm good. And so then I said, you know what? If nobody wants to fix it, I'm going to fix it. And so I've been working on building this product that we're about to launch within the next less than a month. But then in 2023, the SEC, I met with the SEC, a lot of their division chiefs, and we showed our research and we showed all the proof that we had, all the research, all the details, and they said, oh crap. They said, well, we don't oversee crypto, but this is concerning. We will get you together with congressional committees and the IRS. So we met with the IRS. And while we were meeting with the IRS, we were showing them our research, the proof, everything that we had collected over the last couple of years, and the solutions. And we asked them, how do you do the internal audits? How do you get the data? And how do you do the calculations? Well, the way they were collecting the data and doing the calculations, we had just proven in our research was wrong. So the IRS was actually doing it wrong. The IRS stopped the audits March of 2023 because we could prove that what they're doing was giving them false outcomes. Now, they asked us for a request for information, a request for proposal. We gave them all the details in order to how to do it right. And then they went ahead and partnered with Chainalysis, and you can find this online, to trace assets rather than to fix their internal issues. In order to seize assets, to find people who are tax evasion territory, get their assets. Not really a good idea, but that is another story. We also met with the congressional committees, and started working closely with multiple universities. In 2024, these universities used our research again in order to stop the IRS from starting audits up again. These universities have also since peer-reviewed all my research and are drafting research publications right now that should be published within the next couple of weeks to prove everything that I've been saying, that I found is accurate. And so now we come to the solution. And I know this sounds, I don't like to sound cocky, but our product is the solution. We've had it validated. It is not built by coders. It is built by tax professionals in conjunction with PhDs from universities, with me, I've been in tax forever, and with tax attorneys. We've validated everything, and our product lacks the features that would cause the IRS to say, I'm not accepting this for an audit, to help you in an audit. This is where we're at this moment.
Mm-hmm. Gotcha. And wow, thank you for being an advocate for the people and going through all of that for us, because that sounds like a journey. And I know it wasn't easy speaking to the government agencies and things like that. But I just had one more question for you. When it comes to crypto taxes, because people may be asking this, is there a certain dollar amount to make it taxable, or is everything reportable?
Everything is reportable. Doesn't matter the dollar amount. It is not like the 1099s, where you have to pay somebody over $600 in order to generate a 1099. Everything is taxable. Yeah.
Tell us more about DeFi Tax and how people can find it.
So the way we developed the product is, it is very simple on the front end, what the user sees, because we all know what happens on the blockchain stays on the blockchain, can't be changed. The back end is where the complication happens, all the little nuances to ensure that the right data is pulled, the right calculations are met, all the asset classes such as NFTs are correctly categorized. We offer a variety. We also have a bookkeeping version that will be launched as well. So basically, think QuickBooks for crypto. So people who are accepting this in the business world can actually have a very well-produced profit and loss balance sheet and capital gains and losses reported. We have a wait list right now, and you can sign up on defitax.us. And the first launch, the soft launch, will be for anybody who is on the wait list. They will be let in first with various perks, etc. Mid-April. they will be able to really look around, get a feel for what we're doing different. And like I said, it is very simple built because the products on the market have features that allow you to edit transactions, the date, the time, the currency type, and that's just not something that can be done because the blockchain, again, known for once it happens, it is there, it cannot be changed. So we have made it very audit friendly that to a degree, if the IRS comes, we can show them a report that never has been manipulated in any way, shape, or form. And that's the key to really protecting the individuals from failed audits. One thing I want to point out for the people that think, well, crypto is anonymous, the IRS doesn't know I have it. I bought it once, I put it on my hardware wallet or a cold wallet or anything like that. That is not the case. If you look up IRS John Doe letters, the IRS sent out 1,000 John Doe letters to every single exchange and product that uses KYC that requires you to ever, in any way, shape, or form, verify your identity, whether it's Coinbase, whether it's Kraken, whether it's Gemini, Robinhood, or even MoonPay. And these products responded, and the IRS knows the names and identities of anybody who has bought crypto over the years. So there's not really hiding. And again, like I said, they're partnered with Chainalysis. So audit letters will eventually go out. And I just know from experience working with my clients, I have clients who panic when they get a letter stating that they get a refund. And they ask me, oh God, what am I doing? I'm like, well, you're getting a refund. That's a good thing. But can you imagine millions of letters going out to people saying you're being audited for crypto? And then people coming out of the woodwork saying we can help when they really can't.
Wow. That is really good information. And thank you for sharing that because I had no idea that all of that was about to go down or happening right now. So thank you for letting us know. And I'll make sure I have that link in the show notes. If people wanted to learn more about you or follow you on any social media outlets, where could they find you?
So we're on, I'm very much not a social media person. I have people who do it because I don't have time with all the work. I tried to convince my COO to be the person that talks to people, but she refused. So I'm here. I like my numbers. I like to stay in the background, but it is what it is, right? This is all in my brain, unfortunately. I can't transfer it. Mm-hmm. So we have social media. We have Instagram, X, Facebook, LinkedIn. It's all DeFi Tax. DeFiTax.us. DeFi Tax is our handle for most of everything, and that's how people can follow us and find us, and also get updates on the different launch dates for the different versions, because we do have different versions. We have the individual trader, the business version, and then we have the accountant version. And they can sign up for the wait list and get on it for the soft launch when we're ready.
Thank you. And if you all didn't catch all of that, I'll make sure I have it in the show notes, so check those out. Thank you so much again, Janna. This was an amazing conversation and so full of information. And I know you've helped somebody out there with their crypto taxes, so I really appreciate it.
Awesome. Well, thank you so much.
Thank you for listening, joining, and being a part of the Money Talk with Tiff podcast this week. You can check Tiff out every Thursday for a new Money Talk podcast. But if you just can't wait until next week, you can listen to previous podcast episodes at moneytalkwitht.com or follow Tiff on all social media platforms at Money Talk with T. Until next time, spend wise by spending less than you make. A word to the money wise is always sufficient.